Okay, so in this video we're going to discuss the ramifications that the GFC had, not only for the United States but for the rest of the world, and as a byproduct of that, the impact that it had on Australia. So this is the really important stuff, because this is the stuff that affected people's lives. This is the impact that it had on unemployment, the impact it had on material living standards, that had on non-material living standards, and so on and so forth. So basically, after the GFC, the banks theoretically just stopped lending money to people. Unless people had really good credit ratings, it was really, really hard for people to get access to a loan, because they didn't want to be taking on that extra risk anymore, because basically, they had learned from their mistakes. So then this then led to a reduced demand for housing. So investment spending fell because business people couldn't get access to funds. Businesses went broke because they weren't able to take on new loans, so they weren't able to get access to funds to grow their businesses. People rely on credit card spending for demand for houses and dresses and holidays and property, and basically everything that we buy, is highly dependent on credit. So essentially, people stopped spending. Not completely, but there was a massive reduction in aggregate demand. And when people stop spending, that leads to businesses stopping making money. There was a lack, and then they don't need to produce, so they don't need workers. So if people aren't spending money, there's not a need for production, therefore there's not a need for workers. So millions and millions of people lost their jobs. 2.6 million Americans lost their jobs because of this lack of spending in the economy. And not only was it that people were stopping spending, but so many people had lost so much money because of the GFC. So over $500 billion had been invested in these mortgage-backed securities. So people had a dramatic fall in their wealth. Homeowners had lost significant amounts of money because now they had houses that weren't worth nearly as much. Those who had invested in shares in companies, so companies were starting to lose lots of money, making significantly less profits because of the lack of spending. To anybody that had invested in these companies and had shares, or had invested in superannuation, that had millions and millions of dollars dropped off their shares and superannuation, so they started to lose money. So the whole economy went into a free fall. Banks weren't lending, so people weren't spending. People had lost millions and millions of dollars. Homeowners had house prices that were significantly reduced, therefore their wealth had been reduced. Banks had to increase interest rates to basically protect themselves against foreign lending. People started foreclosing on their mortgages, so they had to start living on the streets. They couldn't pay their mortgages back, and because it was very hard to get a job, often these people not only had to foreclose on their mortgage, but they also lost their jobs. So the American economy went into freefall. It had a massive recession. There was a massive reduction in their level of spending. Millions were wiped off the exchange market. Millions and millions and millions, or billions and billions of dollars were lost out of the American economy. So how does that then flow on to the rest of the world? Well, because there's a drop of wealth in the United States and the lack of spending there, partly foreign investors had invested in these mortgage-backed securities as well, so they had lost money there, but more so Australians and people overseas had invested in the American stock exchange. So people had lost lots of money because they had invested in these companies that were now a lot less profitable. Because the banks had reduced their level of loan approvals, there was a reduction in aggregate demand, or a reduction in spending in America, and that flowed through to a reduction in import spending. So the American economy wasn't spending, and as I said, we've got a globalized economy, so they're starting to reduce their demand for imports. So that's leading to less export demand for Chinese products, for Australian products, Japanese products, products from the Eurozone, and therefore all these companies were suffering because they weren't getting the same level of demand from the United States anymore. So people suffered because they had direct investments in the US share market, so people had invested in the US share market in their companies, and therefore they had lost money. People had lost money because export businesses had lost money, and then when exporters in Australia would start reducing their level of spending, they don't spend as much, so that affects other companies in Australia. So, if we're not making as much money from tourism, then the people that work in those industries reduce their spending, and that has flow-on effects for other industries as well. Not only the people that had invested in American companies lost money, but those who had investments in other foreign companies lost money as well, because a lot of foreign companies were starting to fall, their share prices were starting to fall because they weren't getting as much demand for their products from America. So, if you had invested in a Chinese company and that Chinese company was heavily reliant on export demand from the United States, then you lost money as well because your share holdings went down. So the big hit was not only on export businesses in Australia, but there was millions and millions of dollars wiped off super funds in Australia, or I should say billions of dollars. So people that had their super funds invested in American companies, in foreign companies, even in Australian companies that suffered, companies like Qantas and companies, our mining companies didn't suffer as much because there was still demand for China, but it did dip quite a bit for a couple of years because there was the lack of demand for China, because China didn't need as many of our commodities because they weren't reselling those products like refrigerators onto the United States. So even if you had invested in Australian shares, you suffered from the GFC. So in terms of the global ramifications, it started with the US, but it then had a free fall onto anyone that had invested in US stocks, anybody that had invested in foreign stocks, anyone that had invested in Australian stocks, and anyone that had superannuation basically suffered. Anybody that relied on any export revenue suffered, and that reduction in export spending then flew on to reduce demand within the Australian economy, and so on and so forth. And that's why our government had to bail out the Australian economy as well. And that's all as a result of the globalisation. This next part is just a summary of something we did in class, so you can have a look at that in your own time in terms of what were some of the main things. And then this next video we went through in class as well, so you can just flick through that in your own time as well. Thank you.